What is going on in the hood? What's going on in the hood? Yeah, let's get this pate started. What up, peeps? What is up? Give me 1 second here. And then we're about to do the Lord's work in the devil's playground, man. All right. Rock and roll. Hold on here. All right, let's roll, Paples. We in the game, the big game. Dudes, it is time to get the boogie boogie. All right. Ma? Dad?
Yeah.
Oh. All right, folks. What's going on? Hey, welcome to the big 2024 stock market pullback, I would call this, more than anything. All right. The 2024 stock market pullback. I think crash is just a nasty little word, right? 4-letter word that we don't even need, right? So we have had an incredible dumpy McGee that's been going on since, let's call this July 11th. So almost a month, right? Almost a month we've had a pullback in the markets. And so that's about the normal size of a deep pullback anyways. We blew out yesterday. What I mean by blowout yesterday is that we had a 5% gap down in the QQQs. That's a blowout. We also had, the VIX. The VIX flew up. I think it was in the 60s in the pre-market, something along that end. And you had a VIX blowout too, which is usually what you need to see, right? You need that kind of fear in the streets to kind of get things going. You can see the VIX collapsed, and then the market was grinding higher throughout the day. So that was the easy play, what we'd call the fat pitch. And what I mean by the fat pitch was, right, buying this gap down. You're going to get a high level. You're going to get a high level bounce when you gap down this much and you're already that many days down. What I mean by that is if we had gapped down yesterday 5%, but we were near the top, right, we would have a subsequent kind of follow through. But what happened is we already had 2 huge down days with multiple gaps. And so when you gap down on the third day, usually there's like a little bit of a flip. Now, the market didn't go green or anything like that, but it had gapped down quite a bit. And so, we ended up with the little bouncy McGee. Now, today is where the tricky part comes in. All right. So we've had the easy bounce, right? The kind of one that's just like, all right, we knew that was coming. Now, what happens next? So we have different cross currents that are happening in the market that we have to be aware of. Number one, we're holding right down at that 200-day moving average and we closed above it. So that's good, right? And you can see that we did the same thing in the IWM. And guys, that's what I mean by fat pitch. I mean, look at the range on this. So the IWM opened up at 196. I think it was at 192 pre-market, something along that end. You get to 205. I mean, that's 6-7% pop. Like, you're not going to get much better than that. And that's why the market didn't go green or do anything, right? Because how much range can you really have? So now we got kind of flat opens on both of these. And so we've got some levels that we need to just trade around, and we'll start to see how these things develop in, over the coming, handful of hours. So we've got still a gap to fill up here. And then, obviously we have some other ones here. But I think this area here is going to be the congestion zone. What I mean by congestion zone is, we have, somewhere in this kind of zone of love, we have quite a bit of supply that's coming up. And so we'll have to, once we're in here, I think that's probably where the stall out happens most likely. one thing to just keep in the back of your head if you're really thinking about like, okay, right, bull markets, we buy the dip and that's just the play. The odds of us breaking out to all-time highs, like just in a kind of straight manner, is very, very small. I wouldn't say zero, right? But it'd be very small just due to how much we dropped. And then, we kind of came back to where the move started, right? And if you see where the move started, we kind of, we got back close enough, right? But this move from here to here took months, right? It started in April. And so we had 1 month, 2 months, right? 3 months of run before you kind of got back up here. So if anybody's looking for like a kind of straight shot, like, oh, let me buy some NVIDIA, we'll be back to all-time highs really soon. That's not going to happen. And it may not happen for a significant amount of time. And so just be mindful, we could be entering a phase of a volatile range. And that's just an educated guess based on where we are in the cycle. What I mean by where we are in the cycles, we've been running since 2023. The market is up 100%. And now we have a lot of cross currents coming. Once the Fed starts cutting interest rates, usually the selling starts in the beginning of that. A lot of times people think when the Fed cuts the rates, the market starts to go up. It may momentarily, but it's usually the markets bottom out, right? When the Fed starts going deep into the rates, right? They do the QE, they do the money printing, they go to zero, they do all of that. Not when they're at 5% or 4.5% or anything like that. So just got to keep some of these things in the mind. It's been a great run. We're going to still have awesome trading opportunities, but it could be a very volatile range for the next few months as you heal this kind of drop going off. Now, is this a one-off event with the yen carry trade? Very well could be, but I'm not in that camp. I think there's probably a little bit more going on than we think. Let's take a look. Michael, let me see what you got going on here. Hey, so I know a bunch of you guys put this PLTR on the watch list. It's opening up in a weird spot here. That long. You can chase up a 10% gap in this market. Probably not. This one, not so bad. You got maybe a little bit more room here. Both of those are semi-okay. I'd give them, give a little bit of gas. Now, let's just take a look before we get started into the indexes here. So we already saw the blow off in the VIX. My gut feeling on this is if the market's going to ramp, we want to short this UVXY under this opening bar and fill this gap in. You could use the VXX, under this opening bar or yesterday's bar, I should say yesterday's low, and fill these gaps. If the market starts to ramp hard, what we're going to start to see is a nasty little bleed on this thing, a nasty little bleed on this thing. And you can see it typically bleeds anyways. You don't want to get too far in front of this with some size, but I think you got a little something. Gold looks like crap. You can just see here, right? You don't have really, I don't read too much into this. A lot of people think this looks hot, but this looks like a crowded trade to me. It looks like a crowded trade to me. It's having trouble breaking out, right? It's having trouble breaking out. You're getting some volatile swings to the downside. And subsequently, when there's been like some fear in the markets and stuff like that, like things that would be good for gold, we really haven't seen like much thrust in this. This might just be one of those kind of crowded trades where just everybody's been like, oh man, this looks great. And so there's not much else into it, and I got nothing on that one. I think the interesting thing over here, like more of an interest is, you can start to see, right, the real estate market is starting to pick up steam, right? IBB also held its breakout spot. So you do have a couple sectors that are just holding up pretty good. Mr. Brum, how you doing? True. Hey, Armando was saying, if you can't short UVXY, there's an SVXY also. And so, you can see, so this would be essentially if you buy this, right, you're playing for the short on the VIX. So you can do something like that too. There is another one called SVIX, also a little bit cheaper. Similar mechanics here too. These things are a little bit dangerous to play with, so make sure you're using hard stops. The last thing you want to do is be stuck in one of these, and you definitely don't want to hold it overnight. There were quite a few traders back in the day that were loaded up on SVXY in the big run, in the mid 2000s to late 2000. And then that SVXI just blew up one day, and it went up like every day for like years, right? Just grinding higher. And then one day it was just no longer a thing. Good. Let's take a look here. I want Mag 7. So this is the Mag 7. You came down quite a bit here. You held over the 200-day moving average. Now you're kind of stuck back in range. T2000 does have a Mag 7. I'll find it later. Yeah, you can use this ETF for now. TC1000 does have a Mag 7, its own personal in. Right? You kind of got this big move out of it. Now you're stuck back in range. The range is the trickiest part to be in. What we want to make sure that we don't do today is, get too caught up in, the opening move. What I mean by that is there's a gut feeling. I've seen this a lot. There's probably going to be a push at some point today to suck in these shorts. I think that would be the hot play. So you fade off, you go green to red, suck into shorts. I fall for this shit every time, even when I know it's coming. And you suck in the shorts, and then boom, you ramp it back the other way. That's usually the play. All right. That's usually the play that you want to be doing in this type of thing. So you want to be careful here. If it looks like it's going to be rolling over, you may even go down 0.5%, 0.75%. You want to be quick with it if you're on the short side, and then watch and see if it starts to grind, if it hits into a pivot point, if it hits into a Fibonacci. There's always some weird, random, googly, invisible line that most of us aren't watching. Just watch the price action on it. Then what you're going to have is once you see it start to hold, you'll get a higher low, and then I think they ramp it back the other way. Most likely, like if you see here, what was the ETF for Japan? EWJ. You can see Japan held up okay yesterday too. I think we're gonna, we want to make sure we're kind of watching all of this, but that's my gut feeling and kind of how we do this. They're gonna flood it down, and then we ramp it back up. All right. Now let's take a look here. Let's take a look here and see what kind of earnings plays, what kind of news plays, and all that kind of fun stuff we have here. There's going to be, if you ever get in a mode, guys, where if you ever get in a mode when you're looking at the markets and you're saying like, man, I just can't figure out these macro views, right? I can't figure out what's happening in this or that. What we need to do is take a look and just play out some earnings plays, right? Play out some news plays. You'll have an infinitely easier time. You have an infinitely easier time just looking at some good old-fashioned news plays. So let's see what we have here on the earnings side, and then we're going to get a little bit of a hootenanny here. All right, so let me switch screens here real quick. Very rare, Aaron, very rare. Once every decade or so. All right, hold on here. Whoop. There we go. All right, Tuesday economic calendar. You got international goods, that's a blah, blah. Red book sales, that's a blah, blah. These T-bill announcements might be a little bit of something, just because the rates are coming into fruition. But otherwise, let's let's get a little hootenanny going here. So now, if you look here, you got crude oil, natural gas all flat, not really much to it, platinum. So the commodities markets are pretty much calm, minus coffee, which is still going on a run. I haven't noticed the price of coffee actually, at the store go crazy, but I don't really pay attention that deep to that. But I am kind of curious. That seems to be the hottest one. That seems to be the hottest one around. Now, you can see here, Nikkei, right? Topics, 10%, 9%. So that's what my gut feeling of why we may get a ramp up in the markets, because we've got ourselves a good old fashioned something here, right? We got ourselves a good old fashioned something here on the Japan market. You got to squeeze. Shareholder meetings, nothing there. And then we do have a whole host of earnings, out today. So let's see if we got any good upgrades. Crowd overweight. This might be something to keep an eye on because it is so oversold. You're coming in from 400 to 200. I think it bounced up to 220 yesterday. This might be one to keep an eye on. I've been spying on this thing for literally days and days and days. Otherwise, we got pretty much nothing here. NVIDIA chip demand to face limited impact from potential production delays. From blah, 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 old daily. And then you can see here top earnings for the week. We got Disney, Hood, Lilly, Lyft, PLTR, Reddit, Shop, SMCI, Uber, right? Good old-fashioned Uber. Oh, boy. Yeah, some of these will be pretty good. Some of these will probably be worth playing. UPSD, Shop, a lot of these bad boys. And then you can see even today we have quite a few that are actually pushing through. So let's take a look and start digging through these earnings plays and see if we got something that, we can do. Easiest thing to do, guys, is like if you have TC2000 or any charting platform, go in and just highlight all these and then make a list, right? So it's like 8-6? 8-6 earnings, and then just copy and paste all these bad boys in, and you'll have your whole set of earnings right there. And then I'll do the same for the after hours. And so now you've got a whole mess of stuff here that you can do. So if you go back through, right? If you go back through, now I've made a list here, 8-6. I got 132 names that are having earnings out. And now you can kind of filter these by percentage gain. You can add volume. You can add in as many filters as you want. And now you'll have a kind of a complete list of the earnings plays. The reason you want to do this is that earnings plays are going to have a order flow and a volume that's independent to what's happening in the general market. Meaning, if a stock has some blowout earnings, it's going to be doing its own thing on that aspect, right? It's not going to be sitting there like, oh my gosh, AMD's down, therefore I'm down kind of thing. So I always like to kind of sift through these and see if there is a breakout coming, right? If there's a breakout coming on something like that, I want to flip through these things. Like you could see something like if you like small caps, right? Fubo post revenue 380 versus street estimates of 368. Not many companies are beating on revenues right now. Almost everybody's coming in line or slightly worse. And you've got a level here. So if you like these kind of $3 names, $4 names, then this is something you can do. For me personally, I'm too old, too bald, too fat to be trading $3 names here. But I do dive in every blue moon, but not my particular flavor. It just ends up being such a cluster F word. That's not bad though. If you're into this and this thing's got liquidity, it's already got 1 million shares. Like you can put that on your watch list and have yourself a little hootenanny. As long as it holds, right? So don't buy it just to buy, right? Wait for a pattern intraday to come about this thing. BTAI, chunk. You can see here, Uber, right? Up 9%. You got 2 million shares in volume, right? This is going to have some liquidity, some range. Let's add this to the list. Now, the big caveat on this is that, right, it's kind of going to open up under some supply zones here. The best earnings plays are what? When they open up clean, right? What I mean by that, open up clean versus open up dirty. So open up dirty is, right, when you're kind of gapping into resistance. Open up clean is when, right, like, see this? See this gap right here? Now, like, you're kind of clearing out some spots. That's an open up clean, right? So you have a little bit more. See, when you open up here, like you had this subsequent follow through intraday for a couple days, right? So you open up at 74, you go to 82. Why? There's no level of supply on top of the stock. So you're actually able to have some follow through. That becomes very important as you're going through. So now this, you're not opening up clean, you're opening up dirty. And so when you're opening up dirty, you got to be a lot more careful because you're dodging booby traps all over the place, right? Because you have levels of supply everywhere. And so this is on the watch list, but I would not give this an A+ setup. I'd give it a B- setup. Planet Fitness. Now, see, this one's opening up clean. So see how you're like kind of breaking through some ranges here? That's a whole different ball game, right? You're breaking through some ranges. That's a whole different ball game here. You know, you're having basically kind of a multi-year, a little bit multi-year range break here. Now, there's a big hairy Indian butt on this, which is what? Anybody know? What's the big hairy Indian butt on this? Right now, there's not much liquidity to it, right? It's only 4,000 shares. So look, it says it gaps up 8%. How much credence can you put into that, right, on 4,000 shares? There could be just some joker sitting on the shitter right now, right, hiding from his wife, like, oh, man, Planet Fitness, earnings, great, right? Boom, buys 4,000 shares on accident. This thing's up 8%. So we're going to need a little bit more liquidity to do this. On the other side of things, the fact that Planet Fitness is even at $80 is nasty. I had to work out at Planet. I was visiting my sister this weekend in Atlanta, and I was trying to get a quick pump in before my little niece's birthday party because, you know, we're taking pictures, family pictures, right? You don't want to look like a big gelatinous kid. I have a newborn in the house. Like, my son's got to be proud of his dad, right? So I got to have my muscles glowing, you know, and flowing. And so the nearest gym is this Planet Fitness. Now, I haven't been to a Planet Fitness in over a decade, you know, and first of all, why is it all purple? I don't know, right? It looks straight out of Barney. That's fine. But once you go in there, man, you're in the Planet Fitness, and it's a different type of character that like works out at Planet Fitness versus like works out at like a Lifetime Fitness, right? You got a little bit different type of character that comes in. Like, you know, like when you sit down on something at Planet Fitness, you kind of like, you feel a little bit itchy a little bit. You're kind of like just nervous. You're feeling itchy. You're like, man, I hope I don't have any, like, right? Like too many openings in my underoos. There's something weird that happens at Planet Fitness. Can't put my finger on it, but hooray to them for even getting to $80. That's incredible. You really got to respect that. You know, to have a gym that costs $9.99 a month and then have it packed with thousands of people, it's something, you know. So we're going to add that, but the big caveat is it doesn't have that much liquidity on it. Now, let's see here. We got BVS, chunk, ANIP, not much liquidity. And so what you can also do if you want is, right, you can flip this filter, right, so you can just see which ones have the liquidity on it, right? Look at old JMIA's got earnings out today. Whoa. Ah, look at that turd. That's a shame, right? JMIA's the Nigerian Amazon, I believe. And a lot of people had high hopes on this one. It's always been a turd, but you can see here, down 31%. This thing's probably fading off, but you can't short something down 31%. You got to kind of leave it alone. See, this is nice. CellH. Okay, who has brought up the old CellH here? CellH is moving all over the place, all right? So they had their earnings yet. I've been interested in this just because it's been beaten down so much, and I've had a level drawn out on this for quite some time to see if it holds through, And it looks like it is kind of holding into this bone zone here. Now, not much reaction to the earnings itself, right? Not much reaction to the earnings itself. You don't got much of a gap up or down. I'd consider this just a flat open. I'm going to take a pass. Like, I think you can probably trade this. The question, Sean, becomes, all right, are you longing this or shorting this? Right? Yes. Last time it had earnings, and Sean, you're totally right. Last time it had earnings, it dipped down and went. But the cycle was different in the stock, right? So when you have something that's trending up like this and breaking levels, right? When you have something that's trending up and breaking levels, you dip down and you break the level. Of course, you don't have any supply on top, so you can get this big squeeze. And also the market was infinitely different, right, in terms of this stock. So now you got something a little bit different on this, right? Which is, yeah, like it's got a similar type of open, but the location on the chart is totally different in terms of the supply and demand dynamics. And so I'm going to take a pass on this. I think it's probably not for me. Good. The rest of this is all junk. Let's take a look and just see if we got any good PR plays out. What I like to do, scan for gappers, right? Anything that's up 4% or more on, minimum 50,000 volume, but really you need over 500. Look at this 10X, right? So 10X Therapeutics. If you like small caps, right, this is probably up your alley. This is a huge pump and dump stock, right? It was $9,000. So the question becomes when you trade these is, right, are you in first or are you in last, right? Old adage of trading is what? You never want to be the last man to the gangbang. So like you can trade something like this if you got a good pattern on it. What you don't want to do is be the last one. You don't want to be the last one on this, right? Because we already know just if you look left, right, into its past history, that this stock likes to pump up for a day and then die, right? And so this is a pump and dump. It's a 30 McGee. You got to be careful. This Lumen is also a pump. You can see here this particular day, last time it popped, by the end of the day, it closed at 330, so it dropped $1. I wouldn't be surprised to see this be a sucker's gap. What I mean by sucker's gap is when you get a stock that collapses, they kind of give it that one last gap to just draw in all the gap traders, and then they tank it again. So just got to be mindful of that. Whoa, old Coors Nation here. Hey, anybody got the news on this bad boy? Let's take a look. I think, let's see here. Bitcoin did hold 50,000 yesterday. Let me see what the news is. 12% announces exercise of additional contract option by CoreWeave for delivery of approximately 112 megawatts of additional high-performance computing operations. That's probably a sucker's PR. TGTX. Now this, look, reports revenue 73 versus street estimates of 65. It's a low float stock, 97 million. It's a biotech, so it kind of gets us out of this, right? Tech cycle a little bit. You got a biotech stock. You want to probably be in some of these instead. If you're just banging your head trying to trade tech stocks all the time and getting smoked out, there's a whole other world of stocks that you can do, right? And so this TGTX actually might be right up our alley. I'm going to narrow the list down for everybody in a little bit, but let's just kind of flip through these real quick. Palantir, Palantir and its earnings out. You're stuck under this kind of zone of love here. Look, if it clears out, let's just go to hourly chart. I think this will be the easiest way to do it. Let's go to an hourly chart. All right. If you start to clear out this zone on the hourly chart, now I think you'll have something here, right? Now I think you'll have something here. So we want to be just super mindful of this. It's gapping up on earnings, and you've got a spot that it's got to clear. Once it does that, then we've got maybe something to it, right? Now, I don't wait necessarily for it to get right over. What I want to see is it congeal. I want it to show some type of intraday setup right before as it's breaking through, right? So for us, what do? right? We have a handful of type of trades that we like to do at the open. One of them is an opening range breakout. Opening range breakout is when you get a pop in the morning and you get minimum 3 sideways 5-minute candles and you take out the range. That's an opening range breakout, right? Or we do the first pullback buy, which is you let it thrust through, and then the first dip, right? The first dip down into the 9 or 20 EMA, we add it when you get a candle to hold, and then you play it back to the upside. So there's 2 different types of trades that you can do at the open on a gapper. Everything else in the first hour, you typically want to leave alone. Sure, there's like a, this thing, that thing, there's a million different styles of trading. And there's no such thing as right, best style or worst style. But if you're trading like momentum, right? You're a momentum trader. You like to trade trends and you like to trade fast, right? Fast and tight. Then those are the 2 patterns that you really want to focus in on, because those are about pure momentum trading. They're not about levels and this and that. It's right. You see these patterns, it gives you the opening and you can go in and shred, and you don't have to overthink it too much. There's a whole host of other patterns, of course, that we can trade. I think those are usually, that's the guide at the open on earnings plays. Serve. Hey, this thing is probably done for too. I mean, this is a nice gap on it. It did have a little bit of reversal, but my guess is that one's done too. Tobias, ¿cómo está? Hey, K-View. This had earnings out today. Like, this is another stock that, look, it's breaking over the 200-day moving average. You've got yourself, I never even heard of this thing. It's a newer IPO, Kenvue. This IPO stock. So see how like this is a new issue? So it's basically about a 1-year-old company. When you have a stock that reports earnings and beats on earnings, and you have some level of gap or something that's coming through, and it's an IPO stock, it's going to move infinitely better. It's going to move infinitely better than something that's like a 20-year-old company or 30-year-old company or 100-year-old company. So when you have an IPO and you have this kind of like pre-market earnings move versus like say Bank of America, right, announced their earnings, right? It's a 200-year-old company, right? What's going to have usually a little bit more, right? A little bit more push in the tush. Ooh, ooh la la. This one. So let's add this thing right to it. Hot damn. Old Lucid gets 1.5 billion funding from majority shareholder. They got more money. Damn. Just a loss per narrow and from loss. Da, 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 da. See, this stock sucks to trade. So a lot of people like Lucid because it's cheap. The thing with Lucid is that the ATR, right? The average true range is 20 cents a day, 20 something cents a day. So there's just not enough meat to trade back and forth. So like if you have a stock that's got 20 cents ATR, I don't care how cheap it is, right? It's very hard to trade it back and forth because you just don't have the ability to see, right, the kind of cycles of life and like in a stock on its intraday basis. And so you want to really leave those kind of things alone unless you're like more like kind of investing in them or something like that, which, who would invest in Lucid? YUMC. Earnings, revenues rise. Look at that. YUMC is a nice thing. So the Chinese flooded our country with cheap goods, very shitty T-shirts, and all sorts of weird knockoff Tupperware. And they did it for years and years, enriching their society. Hey, credit to them. But what we did was in return, we sent those fuckers back KFC and Taco Bell, right? We sent them Taco Bell. We sent them KFC. You ever see what the Chinese people look like now after we sent them this Yum Brands compared to 20 years ago? Revenge, baby. Revenge, right? So these guys are reporting earnings. you may get some upside on something like this. You're clearing out this level. You got the 50-day moving average right there. Like I wouldn't be opposed to that. And like I said, I'm going to narrow this list down for a second here. Now, these are the earnings plays, right? So now what we want to be doing is like, okay, we got all these kind of random earnings plays, potato, tomato, right? So you got different buckets of trading that you want to do. So when you think about the stock market in general, right, you have three buckets, I think, for short-term traders, day traders, swing traders, like 3 to 5 day holds, right? Your first bucket is, all right, I'm trading stocks that have news out, right? They have news out, they have PRs out, they have something out that's a catalyst, right? So, right, a news-driven play. These stocks are the ones that are going to move around the most usually. When you see stocks that move around 20, 30, 40, 50% over a handful of days or months, right? There's usually some type of catalyst that ran it. So that's your first bucket. So every day you want to search through the earnings plays and the gappers, and you make a bucket. Then your second bucket is stocks that have hot daily charts, like a swing trade stock, something that's about to break out, right? Or something that's about to bounce off a key level. And so you have this swing trade setup, something you can hold for multiple days. Those are often the best things to day trade. And then when you go past all that fun stuff, now you're into a whole different ballgame, right? Then you have the third bucket is like your go-to stocks. Go-to stocks are just the biggest liquid names that have the most ATR. So that's going to be your Teslas, right? Your NVIDIAs, your AMDs, and, you know, things of that nature. So those are your kind of three buckets. So now in terms of like stocks that are showing swing trade setups, there's really not that many. You have something like this True. There's a handful of these, right, that are like clearing out some levels that you could potentially play. But all these stocks have been destroyed. So there's not going to be a whole host of swing trade setups. So bucket number 2 is done. So now you just have the stocks that have the biggest range that could be at key levels, right? And so that's your third bucket. So I want like stocks with big ATR. So I think we go with today ARM if the market holds, because you remounted the 200-day moving average here. You know, so you were at 190, you've come back down, you got cut in half. In general, in a sector that's been trending for a long time, like the semiconductors, a 50% haircut on one of the names is, I mean, that's a good spot to, you know, start looking at something, right? So I like this ARM. I want to be on this. NVIDIA just got an upgrade a little bit ago. They just got an upgrade to 120. I forgot who it was from. I just saw it on the wire. State Street or Street something. You know, this everybody's New Street. That's a nice fugazi right there. It's not even State Street. They're just New Street. So never heard of New Street, but this has got an upgrade on it. That might be enough to get it going. Now, look, it's up 3%. In this market, you don't really want to come in and roll in something deep on like a 3% gap. What you want to let it do is set up. What can you do on a stock like a NVIDIA? Let it orb. Let it do a first pullback buy, something along that end. Those are the two setups that you want to be doing at the open, and you're going to have yourself a potential chance on this, right? I'd even go with maybe an MU. You know, it's been having a lot of difficulties. So it's got a little bit of catch up to do. And then AMD had all the relative strength yesterday. Now, will AMD hold its gains from yesterday? I don't know. Yesterday, it popped up a little bit harder than normal. Number one, due to how oversold it was. But the second part was that, you know, all this news that's been happening in NVIDIA, that they're going to be late on the chips and all this kind of stuff, they kind of give it a little bit extra push. And so we'll see if this holds. I want you to really watch and see how it reacts around, right? This 139, because you tested the pre-market and you faded off quite a bit, $6. And that was yesterday's high too. So you got two kind of tests of this that you're going to have to be super mindful of, right? And so we want to be watching how this thing reacts. If you start to see the algos just turn on this bad boy, then, hey, we are where we are, and we'll come in. We are where we are, and we'll come in and shred this bad boy in a nice, good, God-fearing Christian manner, woo, it's got a look to it, but it's a turn. It's in a downtrend. So we got to be, of course, very careful to roll with this bad boy. Now, you can see Microsoft is in no man's land. My thinking is if the market really rolled and we needed a short, if this fails off at the 200-day moving average, then we can kind of short this thing back down into the 380s. So I have this on potential watch just in case it gets nailed. Google had a PR out yesterday that they lost their antitrust case with the DOJ. It didn't have that much reaction to it, but probably this one is also, I'd lean on this one being a short too. Hey, Simon, great question. So Simon was asking, guys, do you look at the daily close for you to consider it cleared or not? So Simon, if I'm swing trading, then, the close is more important than if you're day trading, right? If you're day trading, what happened like 2 candles before or something like that, do you really need to close over it? No. If you're swing trading to have a confirmed breakout, then yes, a close would need to happen before, you're confirming the breakout. Now, there's a lot of people that will say, well, there's a trade-off. So if you wait for the confirmation, you give up some gains, but you gain probability. What I mean by that is, guys, the difference between confirmation and anticipation. When you have a confirmation entry, you gain extra probability. Hey, my win rate goes from 50% to 60%. But what you lose is because you're getting the confirmation, you have to buy it a lot higher. So your potential reward may go from 10 points to 5 points. So you gain a little bit of probability, but you lose a lot of the reward. And so that's why there's a sweet spot where you're trying to find entries where the confirmation and anticipation entry are fairly close to each other so that you can kind of get the best of all worlds, because it's a nasty little trade-off. You give up a lot of RR when you try to do too much confirmation. And in a shit market, maybe too much confirmation is just not the way to go. Sava, I do think this is probably on Fade Watch today. You may have to check and see if you have borrows. I know E-Trade didn't have them yesterday. They sometimes will just come back, but something to just be mindful of. It looks like a short to me, but it's a very, very difficult type of trade to do. Good. So let's go back through this. All right. So I want to keep an eye on these semis that held the 200-day moving average, right? But I want the ones that have a little bit more room, right? So like if you have AVGO, it's already right back at resistance. You want to be like super careful of the locations, right? So I think ARM is probably, the best bet of them, but I need a pull. I'm not interested in chasing any kind of gap up on these. Oh, nice, Sammy. HIMS does have earnings out today too, I believe. Look at that. Let's earnings rise, shares rise, revenues rise, all the good stuff, but the stock is still getting smoked out. It's going to have probably some kind of decent sized move on it. But I'm not sure we've got any kind of edge on it. BLDR had earnings out too. So you can see this is a prime time candidate. If you need a short, you have a level here. And this stock, used to be literally $2 just a couple years ago. You got a level here to trade around. You can add in a little BLDR to the downside too. ZI had earnings out, TDC, chunk. Good. All right, let's go back through this, guys. I just want to confirm with you guys. Do not be surprised if we get a little bit of a shakeout, right? If we get a little bit of shakeout, we might even roll to the red. That's okay. Like, don't be panicking or anything like that. There's usually some kind of retest or some kind of shakeout to suck in the last shorts if the market is actually at a bottom. I want you to be mindful. A lot of times when the market gets a little wild like this, it's very easy to trade too much size because you think this is how you're going to make your money. This is not how you make your money. You make your money when the market's in these kind of Goldilocks zones where they're just grinding higher. All right. And you have minimum volatility and you just know that they're going to keep going. That's when you take the extra risk. That's when you get a rowdy. That's when you take overnighters and all this kind of fun stuff. Till that happens, you don't need to be this part right here is just a day trader's market. It's a scalper's market. You don't got to do anything crazy. Watch your size and let the volatility play out, and you're going to be in for a good spot. All right, guys, let's go do what we do. Hey, Discord room. I shall be in the chat room. Yes, we start boot camp up. Guys, we start our trading boot camp up Thursday. All old students, you guys have lifetime access. I would definitely come in and retake class as many times as you can. It'll be 4 nights a week live, taught by your